Today I made $61,000 day trading with a simple strategy. I'm gonna be honest with you though, the reason I'm able to withdraw huge profits from the markets isn't because of technical analysis or psychology. It's because I'm able to put myself in the shoes and think like a market maker. In this video, I'm gonna go over every aspect of this trade and how you can start thinking like a market maker to find A+ setups in the markets. Also, if you want a full simple trading framework that I use day in, day out, make sure you check out the link in the description and download the free PDF. Now let's get into the breakdown. Alright, so before we get into the actual trade breakdown, we're going to talk about how to actually think like a market maker and what the market maker's role inside of markets actually is. So when we think about a market maker, right, what is their actual job? So their job is to provide liquidity to the market and help facilitate the flow of the market. If you guys don't understand what market makers do, essentially is back in the day, when brokers would send their orders to the floor, there would be a market maker receiving that order and pairing their order with another order in the marketplace. So they might be dealing with other brokers, they might be dealing with individual traders, but their job is to take that order and pair it with another order. And that's a very simple layman's terms of talking about it. And what I'm going to try and do in this video is to try and get you guys to shift your mindset to start thinking like a market maker while you're looking at the charts. Don't just look at the charts and say, I have an entry strategy, blah, blah, blah. I actually want to put myself in the shoes of, all right, where is the trade going to be facilitated? Or where can I pair my exit? Or where can I place my entry where it makes logical sense? All right, so again, their job is to pair willing buy orders with sell orders, if there's a willing buyer, and pair willing sell orders with buy orders. Okay, so the first question we have to ask is the market trading at a major level? If it's not, right, let's say the market is in a range, like so, let's say the market's just stuck in a range, their job is to just facilitate trade. So basically they're going to narrow spreads, increase the trade frequency. Their goal is not to trade for a profit, but to ensure that they continue providing liquidity without taking on excessive risk, because there's no imbalance in the market for them to actually take advantage of and place their own orders. So really their job is to just facilitate trade, right? And essentially when we're stuck in a range, there's an even amount of buyers versus sellers. When we start getting imbalances, that's when they're going to try and step in and capitalize and also profit from the trade. Yes, they make a certain amount from the spreads, right? And that's basically what the spread is. It's the difference between the offer and the bid. And if there is no imbalance, right, they're basically just collecting on the spread. But when the market becomes imbalanced, then they can take additional risk inside the markets and really place their positions in a way that they can also profit from specific imbalances. All right, so if it's in a consolidation, what we typically want to do is just wait patiently for an imbalance. All right, we're just sitting, waiting patiently. We're doing our job, our daily tasks, but there's no opportunity inside the market. Right, and that's basically if we are stuck in a range, and let's say we're in the middle of the range, right, we're not doing anything. We want to buy it towards the low end of the range and sell it at the high end of the range. All right, but if it is at a major liquidity level, and when we get into the actual chart review, and in these next couple slides, I'll talk more about external versus internal range liquidity and how I was able to frame the trade that I took, and not only that, but provide you the logic behind why I'm taking the trade. All right, so when we're at a major level of liquidity, knowing these points attract higher trading volumes, and that's essential to understanding where the market wants to go to for a draw on liquidity, right? And what is liquidity? Liquidity is basically just people that are interested in buying and selling at certain levels. Okay, so let's dive into some of these slides just so we can get a visual representation of what I'm about to show you in the live markets. We have buy stops. So let's just look at the swing right here. We have a low, a high, and then a higher low. So when this swing point forms, right, and if we don't know what a swing point is basically a 3-bar pattern where, you know, it creates the high end of the range where we'll have a specific 3-bar swing point creating that high, and we have engineered buy stops above it. So right now we are sitting in the middle of the range. Just say that this is the current market price. Buy stops will be created above the market. And if we're leaning more bearish, right, in an overall bearish trend, sell stops will be engineered below the market. And this is where current price is, in the middle of the range. So if I was a market maker and we were in the middle of the range, I have to have an understanding of where there are orders in the market and where trade will be facilitated on a major level once we trade to those specific levels. All right. All right, so let's talk about order pairing. Now we had our buy stops and we can see that the market has ran higher. Well, what is the market maker's job now? The market maker's job is to now pair those sell limits or market sell orders with the buy stops that were just triggered. Okay, so when this market trades higher, we have all these buy stops being triggered, and the market maker's job is to pair sell orders with those buy stops. Okay, vice versa. When we have sell stops and we get a run below those sell stops, these sell stops are activated. Just think about an order book, right? We have price below, above current market price and prices below current market price. And in that order book, there's resting orders. So when we trade lower, these sell stops are being activated. All right. And then it's the market maker's job to pair buy limits or market buy orders with those sell stops. And if we just hop into a chart real quick. Now, a bunch of you probably are wondering, how come it's not one order or the other? Well, very simple. If current market price is down here and we try and add an order up here, right? What options do we have? We have a sell limit or a buy stop. So currently, right now, you cannot enter a buy limit that is above the market. It will kick back and tell you that there's an error with this order. You cannot place this specific trade. So if we were just to go back to order pairing, right? With these buy stops, right? Because let's say the market's down here, there's only buy stops above the market. There's only buy stops or sell limits. So when the market goes up there, it's going to pair buy stops with those sell limits or market sells. Vice versa, sell stops, market makers will pair the buy limits or market buy orders with those sell stops. So when we are triggering sell stops, right, let's say the market's going to go lower, what type of orders do we have? We have buy limits or sell stops. So if the market makers take a position of their own, they will look for a level to pair their sell limit with a new sell stop, right? Because let's say this is a major level of liquidity, which is an external range liquidity raid. All right, and this can either be a previous monthly high, a previous weekly high, a previous daily high, or a previous session high. That is our external range liquidity. And let's say that I think that there's an opportunity for me to make some money. Well, me being a liquidity provider as a market maker, if there are willing buyers in the form of buy stops, right? I want to be the liquidity provider and sell it to them. Just think of this. If you were to walk into a car dealership and we have willing buyers, people that want to buy a car, I'm going to be the provider of that car. I'm going to sell them a car. And that's basically a market. Okay, so when I have a willing buyer and I know that there's willing buyers above the market at specific major liquidity points, i.e. external range liquidity, I am going to be the willing seller to sell them that order. Okay, and once I am in that trade, I'm going to look for what? So if I'm short, that means I need to buy back my position. And in order for me to buy back my position, what do I need? I need a willing seller, right? So in order for me to profit and exit the market, I need a willing seller that I can buy it from in a profit. That's what a short position is. And where will willing sellers be? They will have new sell stops at these specific lows, okay? So again, and I will run through this slowly. If a market maker takes a position of their own, they will look for a level to pair their sell limit or market sell with a new sell stop. So my sell limit possibly was up here, or I just entered at the market. So now I'm short on the market and I need to buy my position back to get out. Okay, so if I'm short, I have a buy stop as my stop loss, right? And a buy limit as my take profit. Okay, so when we get towards the second example in the trade, I'll break everything down in a chart so you can see it. And then vice versa with sell stops. If I take a position on my own, I'm buying those old sell stops, right, with a buy limit or a market buy. And I'm trying to place a sell limit, right, because I know that there's willing buyers above this old high. That gives me my take profit point. All right. So let's just run through a quick visualization again. So me, Jade Cap, or Kyle, I am neutral currently when the market is in a consolidation. Okay, so when the market's in consolidation, I am neutral. But when the market runs higher to buy stops, these retail buy stops get activated. And Jade Cap or smart money will use a sell limit or a market sell order to enter short in the market. Okay, so smart money sell limit will enter short into the market, right? Because I'm selling to those willing buyers. Now that I'm short, my take profit needs to be a buy limit. All right, because when I'm short, I can only exit on a buy. It doesn't matter if the market goes higher or lower. If I'm short, I have to buy my position back. I might buy it in a profit, I might buy back my position in a profit, I might buy it back and it will be a loss. But my take profit now will be a buy limit below the market, right? Because we can't set a buy stop below the market. It's only above the market. My buy limit will be placed here because I know that there's new sell stops here. All right. And this is just talking about liquidity. Inefficiency is what I was using in the trade example, but it's a very similar concept where I'm using a external range liquidity rate for it to redeliver back into a discount or an inefficiency inside of the range. Okay, so I know that there's sell orders resting inside of the range after we've triggered those buy stops. All right, so when my buy limit or TP gets hit, right, it gets paired with a retail sell stop. So Jade Cap, I have one order, right? It gets paired with one sell order. All right, so I can buy my position back, and I'm buying it now in a profit. All right, so now that you understand the logic behind how I think in the markets, I'll walk you through the live trade analysis that made me $61,000. So the reason why I'm looking for a higher dollar to start the week, it's just really based on the idea that, we haven't, well, first of all, a lot of pairs have either gap down or gap up. Euro actually took out the highs back here. So, if you compare these lows, if that same date, which we'll get into the euro actually took out the high. So I'm seeing this as short-term SMT where the dollar hasn't taken out as low. So there is short-term strength here. Now, the only reason I'm leaning bullish right now is because I do want to see a trade up into this imbalance up here. And it would make sense from a short-term perspective because we have this swing point. And in my opinion, if we still want to go lower, I just prefer it to kind of manipulate early in the week, trade to a premium, and then possibly sell off to take out the equal lows later. And then we drop down into a lower time frame. This is basically the price action that we've seen today. Right, we are in a steep discount. We've taken out Friday's low and have since traded away. So we do have this bullish fair value gap that we're possibly looking at. And I'm really only looking to see if we trade back above this consolidation to kind of fill in the CPI candle and then possibly trade lower. So that's really just a short-term play that I'm expecting, Monday, Tuesday, maybe Wednesday, even Thursday to trade up into here. And then Thursday, maybe we'll get our reversal profile to then trade lower to take out the equal lows. Because a lot of times, when we get close to these equal lows, sometimes they'll just run the market kind of really slow and they're not going to take out these equal lows. And what happens if we trade away from it? Now we have even more liquidity being built up below the lows. So where's my loom? I don't have my loom brush for some reason. All right, so but like if we build up liquidity down here and then we run the high out, right? We've basically traded to an internal range liquidity, and then we're going to target external range, which is down here. So these equal lows will be external range. I'm not going to draw it out. My handwriting's probably going to be bad with the brush. But, you know, from a weekly profile perspective, I think it would make a lot of sense to not take out those equal lows right off on Monday, to trade higher, induce some buyers into the market, and then trade lower. So that's basically why I'm thinking the euro will possibly trade lower into that fair value gap. I'll just do it on a daily chart just because it's a little bit easier to see. So right now, you know, basically it's the opposite. So this is that old high that I was talking about, June 4th. If we, you know, compare it to the dollar, we have not taken out June 4th low. So in my opinion, that is showing us short-term strength in the dollar. And this will be SMT. So we've taken out a previous monthly high, right, which is our external range. If we just measure, you know, if we either measure from this high to this low or from this low to this high, it doesn't really matter. We have two ranges that we're possibly looking at that we've taken out long-term liquidity. So, you know, a lot of times when we take out long-term liquidity, we will just trade back into a range, right, to fill in internal range and then possibly trade higher if the market wants to go higher. All right, we won't know that until possibly get down here and then see some type of reaction. But my short-term outlook is to just trade lower to fill this imbalance, and that's kind of the play that I'm expecting tomorrow. I've already positioned myself short based on the run up here, and you know, this inverted fair value gap. But basically, as soon as we punched above this level again, right before Powell's speech, I went short. And basically during Powell's speech, right, almost came up and stopped me out. So my stop is above this high, so Monday's high. But we've since put a after Powell started speaking, right, we had a really strong wick rejection. So basically, I'm looking for us to have this Judas swing early in the week, right, and we can already see that Monday's price action, right, we don't have any price action below the open. To me, it would make sense to trade down here, take out some of this liquidity, trade into the daily fair value gap, and then we'll reassess. But if it does just trade down in this daily fair value gap, I'm basically done for the week. Like, if I get this one good trade and it hits my take profit because my position was entered up here, right, on the closure back below after taking out this monthly high. So this is an old monthly high, right, all the way back here. We took out an old monthly high. We traded back up above it one more time and then collapsed. So that's basically the trade that I took. My stop was 109,230. And my target will be down here at the daily fair value gap. So 3.3 to 1 risk reward. Now, even if we get back towards the weekly open, I might partial sum off. All right, so you just saw me do my evening analysis where we ran above that old monthly high, and I'm expecting that those buy stops that were triggered where I paired my sell order with, that we are going to redeliver back into the internal range, and I can pair my buy limit with some sort of sell stop liquidity. Now, once we had the trade idea fully executed, let's dive into the live tape reading session the following day because my trade hadn't fully panned out yet. So I'm going to drop down into hourly on the dollar. Just keep in mind that this is the 4-hour fair value gap. CISD is a change in state of delivery. Essentially, it's when we're going from bullish order flow to bearish. So we have this bullish fair value gap, but it's failed. So I'm seeing that as a change in the state of delivery where they want to deliver sell side, possibly, if they respect the fair value gap. Obviously, sometimes, you know, we're not going to get winning trades every single time, but usually when we take out a high time frame liquidity pool and then we get an inversion, that's usually my signal that we're getting a change in state of delivery. All right, so they're delivering buy side up into the liquidity pool and then delivering sell side. So when they violate the bullish fair value gap, right? Basically, if you either see me put CISD or inverted fair value gap, I've pretty much view them as the same thing. Oops. Also, I noticed that my ICT everything indicator is not on the right time zone. Just in case you guys were wondering on some of the previous streams. We got news out in 1 minute or so. I'm kind of just looking at the price action from yesterday after we took out that previous monthly high. It's been bearish. So I'm really just following yesterday's price action. But my stop really is above yesterday's high. And if I take a loss here, it's not a big deal because I got a win on the New Zealand dollar. So let's see what they want to do with the news in 30 seconds. Again, I'm still preferring downside price action. It's really only a counter trend play, right? Because we're going from external range liquidity to internal. And then possibly once we get down to this daily fair value gap, then I'll reassess if I want to try and position myself long. But I typically wouldn't go long until we're in a daily discount. Not too quick to jump the gun on doing anything just yet. Like every time I'm sitting in front of the charts, I'm just thinking about, how can I think like a market maker? What would I possibly do to start the week, after some of the price action that we've seen lately? It's, when we have one-sided price action and we have liquidity above us or inefficiency, the logical thing to do is to try and induce as many people into the market before possibly going to a specific level. So, the idea that I have right now is I would like to see it trade to the buy side liquidity, right, to induce buyers into the marketplace, just take it into a premium based on this specific swing. So if I go back to the 4 hour, right, we had this 4 hour fair value gap that it's pretty much respecting right now, but we'll have to wait and see. 2.5 hours from now could change. Really, I'm just looking for it to induce buyers into the market, take it into a premium, right? Just because I think we had already sold off so close to the equal lows that starting this week, it almost wouldn't make sense to just go down there and take out those lows. But we'll have to wait and see. I would prefer if it traded up into a premium first. But right now, I'm kind of just waiting. We did get the initial response that I was looking for, so that's always a good thing. But when we're, trading high impact news like this, when it's core retail sales, sometimes the hourly close can end up completely different than what we're expecting. But if we get a strong hourly close, I'm still, erring on the side that we're possibly going to go run this buy side liquidity up here. I'm really judging it based on the size of the fair value gap and the fact that this is also a breaker. So the premium end of this fair value gap has a breaker. Whereas if you look on the 4 hour, right, we have a fair value gap, but what else is it lining up with? Bearishly. Not really. I mean, we have, instead of looking at this one, I would actually look at this one. this is the inverted fair value gap I would be looking at, right? Because it's much more, it's much easier to see. Like it stands out. It really jumps out. So far, a beautiful trade. I shorted it up here. So, you know, I guess during the weekly review, I can go over it. But it was basically as soon as we ran out the previous high from here, got a closure below here, I basically shorted it in here. The Powell news candle kind of made me a little nervous, but I was okay with it. So it's finally good to see some of the analysis panning out. I mean, I definitely had the right call on Euro last week, but I just kind of fumbled the execution, and that's my fault. I should have stayed long the entire time. But you live and you learn. You can't get everything right. It's just about, I've mentioned this before. It's just about coming into the markets with the same exact thought process, the same criteria that you're looking for, and just repeating it over and over and over again. And a lot of times I'll mention, before the news release, where is the market trading? Are we trading above the open, the midnight open, or below? Because a lot of times on the news release, if we're trading above the open, it's more than likely a Judah swing trading lower. And when we're trading below the open, it's more than likely a Judah swing to trade higher. At the time of the news release. Yeah, and if the dollar just trades to here, I'm most likely just going to meet my weekly target, and I'll just be done for the week. All right, so you just saw me break down the live analysis of the trade. Now we're going to walk through the two dashboards for Funded Peaks and Alpha Capital, the two prop firms that I used to make this much money. And you can see from the last video that I had done, I've only purchased 2 challenges at this firm. I've gotten verified on both of them, and I've gotten funded on both of them. So if we go over to the payouts, and actually I'll flip through the active and inactive just so you can see that I've never failed the challenge here. And when I go to the payouts, you can see that I've been approved for $33,000, and I just submitted another payout for roughly $34,000. So you can see that these totals right here amount to roughly $44,000 just at Funded Peaks for that short that I took on the euro. All right, so if we hop over in Alpha Capital, we can see the trade that I took got me to about $18,000 in profits. My withdrawal date, I don't believe this withdrawal date is correct. I believe it is the 23rd because I got this account on July 9th. So I will follow up with payout certificates once I receive both of them. And I'll make sure to post both of those on my community tab. If one trade example wasn't good enough, here's another live tape reading session that occurred just a few hours later in the futures markets. All right, so we're getting some decent wicks on here on the hourly. All right, so I'm really looking at the run on the Asian range high, this 4-hour breaker, and the fact that I'm leaning bearish bias on NQ. And also, yeah, these are equal lows here. So on a short-term basis, right, I would be looking to target yesterday's low. All right, so you guys just saw one more live trade example that I saw on the NASDAQ futures market, and I'm going to break down the exact chart that I saw and kind of walk you guys through and piece together all the concepts that I've talked about today and how you can put yourself in the shoes of an actual market maker. Now, when I came to the charts during AM session, I saw that we had Asian range highs, okay, and then leading up into the 930 open, we ran out those highs, okay? So I'm assuming that we had buy stops resting above those highs, right? Not only that, we were trading into a 4-hour breaker, and the price action from the previous day was very bearish. So coming into Tuesday, I was already quite bearish, right? I had already produced a short that was a winning trade on the euro, and coming into NASDAQ, I had the same bias. So when we ran out the Asian range highs, we had buy stops, and in my opinion, I'm trying to think like a market maker, right? Where would I place my sell limit, or where would I enter a market sell to pair those buy stops with my order, or where smart money might pair their order? Okay, and then once we got the reaction, you saw me place a short tool on the next candle, right? As it retraced up, and you can go back and rewind the video. So I placed this tool here, and this is where my short order would be. Kyle's short market order, okay? So I'm just going to enter market order short. I didn't get in above the highs, but I saw that they were reacting there, so I'm just assuming that other sell limits and other market sells are being filled at that level because we're getting a strong rejection off of the Asian range highs. All right, and it's very... from a fractal nature, this is exactly kind of what I saw on the euro, right? But there's a little bit different concepts. There's a little bit different nuance to this trade. All right, so this is where my short order would be, my market sell. All right, but in order for me to exit, I have to place a buy limit. So my take profit would go below the equal lows because I know that there's sell stops resting there. So my buy limit then gets filled with a sell stop as an exit. Okay, so I hope this makes sense to you guys. And really, when you're going forward in your analysis and you're charting and you're trying to place trades, really put yourself in the shoes of a market maker, and I guarantee you it would help you 100-fold. I hope you guys found this video useful and can see how thinking like this gives me a huge edge in the markets and removes a lot of the psychological elements when it comes to trading. I'm always thinking about where I can logically place my entry orders and pair my exit orders. If you want more live analysis and the ability to learn directly with me, make sure you check out the link in the description. Don't forget to like, comment, and subscribe, and I'll see you guys in the next video.